Good morning, everyone. Welcome to the LCFS Verification Demystified webinar. We are just going to wait another minute or two while we see some people still entering, so we'll be back with you shortly. Hello, everyone. We are going to go ahead and get started. Welcome to the LCFS Verifications Demystified Biodiesel Focused webinar. Christianson has become an accredited verification body under the new LCFS verification program that became effective January 1st of 2020. With that program, Christianson accredited 6 lead verifiers on staff. The verification engagements for producers also require a Fuels Pathway Lead Verifier accreditation with an engineering background. Christianson has been proud to partner with 4 firms to meet this requirement. Those firms are Lifecycle Associates, Mergent, Pinnacle Engineering, and Power Systems Engineering. Throughout the beginning of 2020, our partners and the Christianson team have been navigating the new regulations, finishing development of our verification program, and been in almost constant contact with CARB about various issues. We would like to share with you what we have learned so far as we come into the end of the year, and you begin looking at engaging a verification body for your own requirements. One quick admin item. All attendees are muted throughout the presentation. We will be taking all questions at the very end of the presentation, and questions can be submitted through the questions pane in your GoToWebinar control panel. Now, please allow me to introduce myself. My name is Carrie Buttenhoff, and I am a CPA and the manager of the compliance department at Christianson. I have been at Christianson for almost 13 years and have spent that time growing with the RFS and other compliance programs, most recently California and Oregon LCFS. Christianson is a public accounting firm that has worked with the biofuels industry for over 30 years, offering traditional accounting services, an ethanol benchmarking program, and grant writing, just to name a few. We started the RIN test engagements in 2007 when the RFS was implemented and have been working in various capacities with many compliance programs, including the RFS, LCFS, and Canadian RFR over the last 13 years. I will be presenting our first section of today's webinar. We are going to take a look at timelines for validation and verification services, what you can expect from a Christianson verification, and how to set yourself up for success in these engagements. So first, I'd like to start with verification timelines. This is one of the main questions that we get when we talk to new clients is, what does the system look like and how long does this whole process actually take? And that can vary, as you'll see as we walk through this. So starting at the very left with contacting your verifier. For applications, if you're applying for a new CI, we suggest that you contact your verifier at least 1 month in advance of submitting your actual application. As far as annual verification goes, for the annual reports that you'll be filing this coming year, we suggest that you look at contacting and engaging a verifier in Q4 before the compliance year is over. So for the 2020 reporting period with a verification due in 2021, we're hoping to engage most of our clients by the end of this year in 2020. Reason for that is that there are a limited number of verification bodies that are accredited and the entire system will be starting the program in 2021. So we anticipate that schedules are likely going to be tight. So definitely take a look at engaging your verifier early. Once you've engaged your verifier, the next step is to do a conflict of interest evaluation. So you'll see in the white box in the middle of the arrow a COI form. You want to start this prior to submission of the application because depending upon what your risk level is will depend on how long that process takes to complete. The verifier will do a COI evaluation, and if you are considered a low risk, then we can begin work immediately. If you're considered a medium risk, then we have to wait for a CARB approval of our relationship and the other services we provide besides LCFS verification in order to start work. A medium conflict of interest approval has taken anywhere from a month to a month and a half to receive right now, and that's with only a fraction of the industry doing the validations right now. So when the whole system is up and running and coming through, it's likely it could take longer. The other piece you want to work on while you're preparing your application for submission is the monitoring plan. Paul Medorsky is on with us as well. He's going to talk in more detail about the monitoring plan next. Just as a high level, it is an overview of the facility, its processes, the metering equipment, and the data sources. It only makes sense to build this as you're doing your application. So as you're pulling data and determining what the numbers should be in the calculator, document where those numbers are coming from, what meters you're using, and of course, you probably have from the EPA process flow diagrams and overviews of the facility equipment. The monitoring plan would be great to have done by the time you submit the application. However, most people need a little more time. We suggest that you aim at having it ready 1 to 2 weeks after submission of the application at the latest to not slow down the verification process. Once your application is submitted, then CARB does an initial review of that application. So again, if you're doing a validation to get a CI and you have a Tier 1 calculator, CARB will do a very high-level initial review, which should only take about 2 weeks, unless they raise some red flags or have questions. If you're doing a Tier 2 model, CARB does an in-depth review before releasing it to the verifier. That process could take 3 to 6 weeks or more, depending upon how complicated your application is. For the verification of the annual reports, we are unsure at this time if CARB is going to do a review of those annual reports prior to passing them on to the verification bodies. So we're not sure if you'll have that 2-week window or if it'll move directly from submission to the verifier. So we'll try and keep you posted on that. On the second yellow dot there, when CARB is finished with their review, they will release the application or the annual report to the verifier through AFP. One important thing to note here is that release of the application is considered the deemed complete date for a Tier 2 application. We'll go into why the deemed complete date is important in just a minute. Once we receive the application or the report through AFP, we ask for at least 1 week to review the monitoring plan, do some initial data checks, and pull samples and request sample documentation before we site visit. The site visit we typically try to hold on the front end of the engagement, and it usually takes 1 day. Once we complete the site visit, and we'll go over in more detail what that involves in just a few minutes, once we complete the site visit, then we will complete the rest of the detailed validation or verification work as a desk audit. So we will continue reviewing support documentation and bringing up any issues that arise. Hopefully we can wrap that up within 2 weeks of the site visit. Sometimes that can get delayed if we have to bring up questions to CARB. The next dot there then is the log of issues sent to producer for corrections. So throughout our procedures, we keep a log of issues with any errors that are noted and things that have to be corrected to get a positive statement. We'll send that over to you to make corrections to your application. Once you are finished, then we'll move to the next dot of final review and draft and finalize the report. You'll see that the space between these 2 dots is client driven. So it all depends on how quickly you can gather the data or make the changes to your calculator and or monitoring plan and get those resubmitted back to the verification team. Once we receive your final application, we'll make sure everything is accurate as far as corrections that we ask to be made. We'll draft the report and send it to you for review, and then we'll finalize the report. Once we get your approval to finalize, we will get the final copies ready and submit them. The verification body submits them to CARB. That last dot there before the certified CI is another important spot to note. So if you have a Tier 1 validation, then when we submit the validation statement to CARB, that is considered your deemed complete date. Once we submit the validation, you are finished with the verification body, but CARB still does a final review of the validation statement itself and of the final calculator. We have seen that it's been taking about a month to a month and a half from when the validation is submitted until you'll see it on the certified CI pathway list on the website. Now back to this deemed complete date real quick. What is the significance of this deemed complete date? The deemed complete date determines when your CI will be effective. So if your deemed complete date was received, for example, on June 25th, then once your pathway is validated, it is effective all the way back to April 1st, so the beginning of that quarter. That is why it's so important to recognize where these deemed complete dates come. For a Tier 1, it's at completion of the validation. For a Tier 2, it's right before we start the validation process. Next, I would like to cover expectations for a Christianson verification, and I specify a Christianson one because all of the verifications can be different. Some of the verification bodies are CPA firms, some of them are engineering firms, some are consultants, so they'll all likely look very different. The Christianson verification, since we are a certified public accounting firm, has to meet not only the CARB requirements, but the AICPA requirements. What exactly does that mean you're doing extra is typically the question that I get. And really there is nothing. CARB set these up wanting the rigor of a financial statement audit. Therefore, CARB's requirements closely align with the AICPA requirements. So there's nothing additional that we do being a CPA firm. We just already have built the checklists, risk assessment forms, procedures, how to attack the procedures. So we have much more of an experience base walking into this than other types of firms. Another difference you'll see on a Christianson verification is that you will have for sure 2 lead verifiers. You'll have a transactions lead verifier who is an expert in accounting and auditing, and you'll have a fields pathway lead verifier who is an engineering expert. These 2 will be on your site visit and work well together to cover not only the equipment and processing, but the risk assessments, financial aspects, and those types of things related to the validation process. Finally, with the Christianson verification, you're also getting our extensive experience and knowledge of the plants. We've been working in the renewable fuels industry for over 30 years, and a majority of our staff have been on the ground in the plants and understand them inside and out, both from the processing side and the accounting side. And then that paired with our engineering experts really gives us a great experience and knowledge base to do these engagements. What does a team look like for Christianson verification? Our teams typically consist of 4 to 5 members, a staff, a lead verifier from Christianson, that's your accounting and auditing expert. If your manager in charge of your account is not your lead verifier, then the manager will be involved. There will be the subcontracted engineer that holds the Fields Pathway accreditation. Those are engineering experts. And then there will be an independent reviewer. This is a CARB requirement. You won't hear or really see the independent reviewer. They're required to stay hands-off with the file the entire time and do a review at the end to make sure our risk assessments and issues that were found all align, and that we covered everything from the regulatory standpoint. Next is the process flow. So in the 1-week time frame from when we receive the application and when we choose to schedule the site visit, I already mentioned we'll review the monitoring plan, we'll do some initial data checks and requests, and we'll pull a sample for additional data that we'll need. Once we get to the site visit, We typically bring 2 people there, and the process for the site visit works, as you'll see on the screen. It starts with an interview session. So we typically have our engineer lead verifier and our accountant lead verifier present at the site visit. We'll meet with the plant manager, an accounting lead that works with the calculator data, and typically lab manager or maintenance manager available throughout the interview session as needed for questions. So during the interview session with those people, we'll walk through the process from feedstock to fuel to co-products, and we'll get an understanding of the equipment. So we'll walk through the process flow diagram, and then we'll also get an understanding from the accounting side and how the data goes from the meter to the reports that bring the data into the calculator. Once we finish the interview session, then our verification team will break apart. The engineer will go with the plant manager to walk through the plant and view the actual process and equipment. And the accounting lead verifier will stay in the office with the accountant lead on the plant side to start going through support documentation, data, conversions, and those types of things. The site visit usually takes 4 to 6 hours, and we do limited detailed testing during that time. Once we finish with the site visit, in approximately 2 weeks, as I noted, we'll be working on the desk audit. We'll finish our detailed testing of all those support documents like BOLs and scale tickets, and we'll bring up any additional questions that we have in the calculator. As I noted before, we will track a log of issues. So anytime we see a potential issue for correction or something missing from the monitoring plan, we'll note that in a log of issues. It's essentially an Excel table that just lists them, 1, 2, 3. These are the issues and the corrections that are needed. So once we've finished with all of our detailed testing, we will send you the log of issues so that you can see the corrections needed, and we'll pass your application back to you in AFP. At that point, you can make any adjustments to the calculator and resubmit it to us through AFP. We will check that all the corrections have been made and draft the report for your review. Once you've approved the report, we will finalize it and send it to CARB. One item to note is there's 2 versions of the report that get created. The first version is just a 2-page form that CARB has given us as a template. It basically just gives the opinion and has the sign-offs of the lead and independent verifier. That report gets submitted to CARB. CARB also requires that we prepare a second report called a detailed validation report. The detailed validation report will have that 2-page form that CARB prescribes, and then our independent accountant report that's required by the AACPA, and then a process overview, data source overview, the data checks we completed, and the log of issues. So all of that will be combined into a detailed validation report, which gets delivered to you as the producer. CARB has the option to request this report if they choose to see it. And in all honesty, at the beginning of the program, they have requested all of them. They said they are getting comfortable with the verification program and also the verifiers that they're asking to see these. So hopefully we'll get to the point where we don't have to submit the detailed validation report to CARB. But they can request it, and we would send that to them upon request. Last thing I wanted to note is how to set yourself up for success. Some of these things seem relatively simple, but they are items that you should be aware of. First is to read the calculator instructions for your application or annual report. There's a lot of detail and assistance in those instructions, and some of our team throughout the webinar today will also note some guidance documents that you should be aware of. So make sure you read those and are familiar with how the calculator works. Next is to be familiar with your calculator. A lot of people hire consultants to help them prepare the application or the annual report, which is a great idea, and I highly suggest that. They definitely know these things inside and out and where the key items are popping up that you have to be careful around. I suggest that once you are finished with your application or your annual report, sit down with your consultant and walk through it with them. What conversions did they do to the data that they requested from you? What are other pieces that were changed or that you should be familiar with? So The consultant is not going to be at your verification site visit with you, and it's sometimes difficult to ask questions and have them constantly deferred to a consultant. So try and sit down and walk through or ask them for a summary about the data that goes in there and conversions that they may have done to it. Next is the monitoring plan. You definitely want to make sure that it meets the requirements and the regulations, and I have noted the regulation here with those requirements. Paul will speak more to that shortly. Finally, we ask that you be proactive with CARB on unusual items and situations. It's probably a common theme you'll hear on the webinar today. Anything that doesn't directly align with the instructions, you should definitely be bringing up with CARB ahead of time, as a lot of those items require approvals or operating conditions. And right along with that, leave lots of time for the verification. These are not things that can be started on July 1st and be finished by August 31st deadline, especially if you have not been proactive with CARB. So leave a little cushion. It's better to be done early than to be pushing the deadline. Lastly, the other piece we would suggest is consider opting into quarterly reviews. As I noted earlier, there's a limited number of verification bodies available, and our schedules are going to get tight come this spring when the entire program is looking to be verified. If we can move some of that work to a quarterly interim schedule and start doing some of it now, that leaves just a quarter for us to review when the entire program is coming through the system. So we highly suggest you think about implementing or opting into the quarterly reviews. All right, next we are going to talk with Paul Madorsky. Paul is a principal of Mergent, one of our LCFS partner firms. Paul is a professional engineer who provides environmental permitting and compliance services to renewable energy companies and has been serving the industry since 2000. Paul holds the Fuel Pathway Lead Verifier accreditation for the California LCFS program and will speak with us today about LCFS monitoring plans and the equipment and process side of the verifications. Over to you, Paul.
Thanks, Carrie. As Carrie mentioned, I will cover a little bit of information about the monitoring plans, as well as calibration requirements and process equipment, some things we've seen so far within the program and within our verification process. So as Carrie mentioned, there are specific requirements under the California Low Carbon Fuel Standard rules. I have the citation here as well. I'm going to recap some of the high-level requirements. There's a lot of them. There's several pages within the rule. So I highly recommend people familiarizing yourselves with that. I will kind of cover that in high level today, kind of give some examples of different parts of that to kind of further explain what it is that you should be looking for in your monitoring plan. So the first one is business boundaries and operations. The intent of this is to give a context to the activity and other programs that you're involved in. This can cover things like feedstock receiving and storage, whether you have that on site or whether you're receiving that from a contractor. In the case of biodiesel, do you get your product directly from restaurants, for example, as a used cooking oil, or are you getting material from, say, an industrial source? So those are important things to kind of lay out and provide context to the verifier by way of this monitoring plan. The next three I'm going to cover together because they kind of held together. There's management policies and practices for reporting, including your record keeping. There's processes and methods for data collection and explanation of the data queries for intermediate and final data. So those kind of meld together. That's covering your accounting systems for how you're tracking your data, how it's logged, who's logging it, when they're logging it, whether you're doing things on daily or monthly inventory sheets, for example, for your inventories. It also addresses things like how do you get your raw process data into your final data inputs that go into the calculator. An example of that may be the query of your monthly product shipments in Agris or IntelliFuels or some other tracking software system. The next thing is a block flow diagram showing the locations of the measurement devices as well as the sampling locations for all of your calculated reporting data. And so for that, they're looking for really a basic depiction, but one that's going to be very helpful for your verifiers to give a layout of the process, the facility, where the equipment physically is within the process flow, and where those equipment, what parameters those are measuring for the purposes of putting into the calculator. A lot of times this one actually is something that is easiest to do up front first before doing the written plan, because with the block flow diagram, it kind of gives you the roadmap for what you're going to do for determining your data inputs for your calculator. Next requirement is identification of all measurement devices that are supplying data for reporting. There isn't a clear requirement or explicit description in terms of the level of detail within the LCFS that's required for this part. So there's discretion here by the author of the plan as well as the verification body when reviewing the monitoring plan. I would recommend at a minimum that you're providing the type of device, probably the manufacturer. It doesn't say that you need model number and serial number necessarily, but just be mindful that whatever you put into the plan needs to be maintained and updated. So anytime you're making changes, that could be affected. So I just recommend that you keep that in mind as you determine what level of detail you put in there. The next one's a pretty long one, and we're going to talk in more detail about this in a moment. But the next one is description of devices, methods of calibration, or showing whether it's a financial transaction meter, description of your QA procedures, maintenance, and repair of continuous monitoring equipment and flow meters, and then also providing dates for last calibration and the next planned calibration. That's explicitly required under the rule. Some other requirements would be including equations for doing calculations of any of your data inputs. Oftentimes you are putting a value into your calculator that isn't directly measured from your process. An example of that might be that you have inventories that are taking a measurement either in physical inches of liquid in a tank or a pressure transmitter that's reading a percent full number, which then is applied to your tank volume to come up with your total volume of material in the tank. So that's a calculation. And then also taking that gallons, for example, and maybe converting that over to a mass basis, which then it would be another calculation. So that would be things that they would want to see. So it shows the verifier how you're actually getting to that final data input. Another item is job titles and training practices for the key personnel involved in data acquisition, monitoring, reporting, and report attestation. So they want to know who's going to be involved in the program. And not only that, but how do they know what they're supposed to be doing? So that should be provided in your monitoring plan. You should also provide records of corrective and subsequent preventative actions taken to address verifier and CARB findings of past non-conformance and material misstatements. So material misstatement, hopefully no one will have those, but that would require corrective action. Non-conformance, that's going to be more likely event. That's just simply a situation where there was something that wasn't technically in accordance with the rule, so something needed to be corrected in order to prevent that. non-conformance going forward. Also include a log of modifications to the fuel pathway report conducted after an attestation. So that would be in response to review by a third-party verifier or by CARB. Again, that's just a situation where this monitoring plan is intended to keep track of those modifications that are being done as you go forward. Provide a written description, if one exists, of an internal audit program. So if you have other internal audit programs outside of the ones that are within the LCFS, this would be a good point to be able to include those, to be able to show how you're performing internal quality assessments. Also include methodology used to allocate the fuel quantities produced for each pathway. There's a lot more detail on this in the LCFS. I'm not going to go into it in detail. The folks at Christianson can talk about it in a lot more detail and provide you with further information if you'd like. All the stuff we just covered, you could probably reproduce that for the fuel allocation requirements as well, fairly extensive. So not something we'll get into today, but just be aware that there is additional requirements for that. Okay, so before we get into some real specifics, I kind of want to finish up the monitoring plan portion with a discussion on some recommendations. The first is I recommend to people that they should look at the parameters they need for their calculator and determine which ones are measured with financial transaction meters. Financial transaction meters are actually defined under a different California regulation. It's under the mandatory greenhouse gas reporting regulation, referred to as MRR. And the ones that are most likely to be triggered at a biofuel facility would be the use of equipment by other companies that don't share common ownership with the fuel supplier. So if it's something that's relied upon by others as a part of that financial transaction, for example, for your final fuel sale, that would be a good example. And also ones that are sealed by, for example, a county weights and measures or county designee. Now, for those that are non-financial transaction meters, most of your detail within the monitoring plan is really going to dig into a lot of details on those particular meters. Those are often referred to as internal meters. Those, you're going to provide a lot more information. My one recommendation on that when you start digging into that is to make sure that the plan is a usable and manageable plan. So as you saw from the list of things that we talked about, there's a lot to go into the plan. And when you start digging into that on your internal meters, if you're going to spend a lot of time putting a lot of detail in there, you also have to be committed to making sure that you're updating that going forward. Now, when we talk about internal meters, there's requirements related to calibrations. For those that are financial transaction meters, like we said, those are often used for sales and purchases. We'll check those for proper installation and suitability of use. If they are properly installed and suitable for the use, they're generally accepted as accurate for the purposes of the LCFS for the parameter which they're intended to measure. Now, with that said, there may still be issues identified from time to time on a financial transaction meter based on a site visit or data review. And we'll get into a specific example of that here in just a little bit. The next thing is the internal meters. The internal meters, there's going to be a lot more focus on calibrations. So these are going to be your level transmitters, your tank gauges, things like that that are going to be done for inventory measurements. That's going to be your main internal meter data. May also include flow meters and moisture measurements. So for these internal meters, CARB has established a set of requirements. The first is to calibrate per the manufacturer's specifications in terms of a frequency. Now, if, for example, there isn't any manufacturer's calibration frequency, CARB says they need to be calibrated or inspected every 6 years. In those situations where you don't have a manufacturer's recommended calibration frequency, we recommend to first determine your calibration methods. So if possible, if there's a manufacturer's calibration procedure, not necessarily a required frequency or recommended frequency, but a procedure available for that equipment, we recommend using those methods if that is an option for your particular installation. If not, I would just recommend an inspection that you can show to your verifier demonstrates the accuracy of the equipment in question. Then the next step is to identify a frequency. If the manufacturer doesn't have one, obviously you're required to do it at least every 6 years. If it's a situation where it's easier to remember it and establish it within your maintenance program, for example, on a more frequent basis, you can do that. And then finally, the most important thing probably is to document your results. Whatever you're going to do, make sure you're documenting it. If you put in a preventative maintenance procedure that establishes an annual inspection of the equipment to come up with and confirm accuracy of the readings, be sure to document the results and document any adjustments and things that may have needed to be made during those inspections. And most facilities have a maintenance database system that will allow them to be able to keep track of that. So with that said, a few things that we've seen so far. One is on product loadout. The important thing to note on product loadout is it's temperature corrected, required to be temperature corrected to 60 degrees Fahrenheit. So as I mentioned earlier, even if you have a financial transaction meter, this would be an example of, ones that go through verifications by a county verifier. The important thing is to make sure that includes temperature correction. That is a requirement of the regulation. And in the example of a county verifier verifying a loadout or fuel meter, they may just be looking for volume. So there's kind of two parts to that. There's volume and there's temperature, which then gets us to our corrected temperature, temperature corrected volume on those data inputs. Another one would be feedstock inventories and their inclusion within the program. Some facilities don't inventory, they'll run dry after each delivery. It's important to note that the method of throughput measurement, so basically the units that are being measured, may differ from the calculator. So it's very important to note that and to identify how you're getting from one to the other. Oftentimes, you may find a particular material is measured in gallons, for example, but it may be reported in the calculator in pounds. Another example would be product tank inventories. These are often done with laser or sonar or pressure pads to be able to sense the level within the tank. In the instance where you're using something that directly measures the liquid height, these aren't going to necessarily have a manufacturer's calibration. So make sure that you've identified what you're going to do for a verification for the purposes of the LCFS. And then also make sure that you are temperature correcting your inventories. So you may have a volume which is directly based on measurements right there at the tank, but they also need to be corrected to 60 degrees Fahrenheit, similar to the product loadout. And with that, that concludes what I had for our equipment updates.
Thank you, Paul. That's definitely some much needed information on the monitoring plans. I know that's been kind of an area that people have been asking lots of questions about and how to draft this thing, so we appreciate that information. Next, I would like to introduce Zach Hauser from the Christianson compliance team. Zach has been with the firm for 5 years and is focused on compliance programs, specializing in RFS, LCFS, and Canadian RFR programs. Zach will be discussing what we've learned on our first biodiesel pathway validations. Zach, I'll pass it to you for further details.
All right, thanks for that, Carrie. So as Carrie mentioned, I'm going to be covering some key items and trends that we've come across so far this year throughout our validation and verifications to this point. A quick overview of what I'll be talking through in detail. We'll touch on operating conditions and kind of what those are and how they've been working. Some of the key calculator input items that we've seen, questions on or differences in recording or errors. And then we'll go into the fuel pathway allocation a little bit for produced fuel. So how are you taking your produced fuel that qualifies for credit generation and properly applying that? This is especially a big one for biodiesel because you're going to typically have multiple pathways for each feedstock. We'll touch on some feedstock definitions and inputs. And then we'll finish with some specified source feedstock process items. All right, so operating conditions. A couple examples that we've come across. The first one here, this co-product energy density in field 2.19A. That one is typically going to require a sampling and testing plan to be completed with CARB. And I mean, this one is obviously very common for a biodiesel fuel pathway, so it's almost becoming more of a standardized process. The next one, the biomass boilers and alternate fuels in field 2.14. This one's not as common, obviously. There's several plants that aren't going to be inputting in this, but if you do burn alternate fuels, this is something that you'll want to work with CARB on as well to determine what that emission factor is. And then just in general, as you're going through the application process, if there's any unique items that you have with your facility that could potentially reduce your CI score or save a lot of time and costs, that's something that you should probably, you're going to want to bring that to CARB on the front end. Or if there's something where maybe you have questions on, the instructions don't make sense for, what we're doing here, it's definitely, I would recommend bringing that to CARB on the front end. It's going to save a lot of time if these items are brought to them initially and discussed. That way, it'll just make the verification or validation a lot smoother compared to if they come up during the verification. We might have to go to CARB then with those questions at that time, and then it could set you back for weeks before you get an answer at that point. Another benefit of these, they're just good guidance for not only us as the verification body, but for you as the client as well. And I would anticipate, with the program being new, these operating conditions are getting assessed kind of on a case-by-case basis right now, other than the co-product energy density that I noted. But as more and more of these come through, I would anticipate that the process will get a little more streamlined for at least certain operating conditions. And moving on to some key calculator input items. The first one here, should methanol percentage of a catalyst mixture be included in your input for methanol use? This question is kind of still open-ended. We have brought this to CARB, and their initial thoughts on this is if it's a significant percentage, say you're using sodium methoxide and you've got 50% of that is methanol, then you should be able to easily calculate that and input it, and so that would be the recommendation, is to include it. If it's a minimal percentage and it's tough to compute, then generally they're going to say you could leave that out, but it's still something that I would bring to CARB just to make sure. And the reasoning for that is if it's a minimal amount, it's probably going to have little to no effect on your CI at that point. Another item surrounding methanol use, there's a little confusion between the calculator, a couple of different tabs, and the instructions. So the calculator notes gallons, which is actually the correct unit of measurement that should be input in there. But then if you look at the summary tab of your calculator, that actually notes it as pounds as well as the instructions right now. So that could be some confusion there, but what's important to note is that on the biodiesel tab, it's labeled as gallons, and that's what should be properly input. Natural gas usage conversions. So this is kind of a big one too. Typically, you're gonna probably get a monthly report from your provider and use that as your input for natural gas usage. So it needs to be input in MMBTU at higher heating value. So say your monthly usage reports come in like a volume unit of measure, then you're going to need to convert that, obviously. And so it's important to know that the correct default would be 1030 BTU per SCF. And that's also in the, there's a tab on the calculator with that notes that as well with the different conversions. B100 in inventory and sales. This I just wanted to touch on, say you're a biodiesel plant that does mainly B99 sales. You just want to make sure that you're not including that small diesel amount in your total sales or inventory for that matter. So if you are, basing it off of a B99 report, just make sure that you are removing that portion. And then methyl esters production. This is essentially the same. This is essentially B100 production. So it needs to be included in your calculator, but it's obviously not going to qualify for credit generation simply because methyl esters are sold as, for industrial use and not transportation fuel. All right, a few more input items here. Co-products, all of your co-products, you should be adjusting for moisture content on these. It's also noted in the regulations that your co-products should not be getting further processed down the line after they're shipped out. But CARB has actually noted that glycerin is an exception to this. And so they actually assume that glycerin would be further processed. And then as far as like adjustments to related to glycerin, you've got your moisture correction that's still going to be required, but there's not a adjustment required for like any other impurities that might be, in your crude glycerin. And then co-products used as process fuel. If your plant is doing this, then you want to make sure that you're removing the amount of co-products used as process fuel from your co-product production. And then obviously you would not want to remove it from production, and you're not going to want to input it as like an alternative fuel, because then you'd be double removing it. So make sure you're not doing that. Fuel transportation. You must use official mapping sites to calculate this. And some of these actually require that you set up a user account. For instance, like I know the BNSF Railway or the Union Pacific Railway websites do require that. So just know that. And then you might have a question, well, what do I actually really want to report as far as the distance for my transportation? There's the weighted average, where if you're shipping to California, you can take, all your different locations and amounts and calculate your weighted average. Or if you want to be conservative, you could just select, the farthest location away, input that mileage into your calculator, and then that would be, I guess, the conservative way to go. And as a verification body, we would just check that is in fact the furthest distance that you're shipping to. So make sure you do review that carefully. All right, fuel pathway allocation. We are required to review this for validation and verification, even though the calculation is kind of done on the back end of your CI score. It's kind of done on the back end and then flows into your quarterly transaction reporting. Just know that it is a requirement for validation and verification, so you're going to want to have that ready for us when we get going. The feedstock usage and fuel sales in your allocation calc should agree to what you're inputting in your calculator. And keep in mind, sales outside of California don't qualify for credit generation, but they still need to be tracked and assigned to a pathway. So likely, if possible, you would want to assign those to your highest CI pathway. Inventories, you need to track those for each feedstock pathway and make sure none are negative at quarter end. And then your total credit inventory at each quarter end should not exceed your fuel inventory, your physical fuel inventory. All right, some definitions and inputs. The two biggest ones are the UCO and tallow inputs. There's a little confusion on the way these two are defined, and they're also the higher risk specified source feedstocks. So just wanted to touch on those. UCO, used cooking oil or brown grease. So like waste edible oils aren't eligible. So like an example of that might be, say you're using vegetable oil for industrial use, or a company's using that and you're buying that from them. You want to make sure that that's excluded. We'll touch on that a little bit more in a bit. Tallow is defined as animal fats, fish oil, and yellow grease. There's a little confusion as well with yellow grease. I know a lot of the UCO shipping documents or invoices note UCO as yellow grease, and within the industry it's kind of used interchangeably. But just know that, yeah, CARB kind of came out with a different definition for that. So just be aware of that. Your moisture and distance reporting. This needs to be also calculated on a month-by-month basis, and you're calculating the weighted average for this. So that's something you want to make sure you're reviewing. And for feedstock we can't trace or that doesn't qualify, you've actually got a couple different options to choose from. The first would be you can choose to exclude your raw materials and finished goods. You would calculate your finished goods that you need to exclude based on your facility average yield. And to do this, you can follow the fuel pathway allocation guidance at 19-08. It's important to know that even though this is going to be excluded, it still needs to be tested on the verification and validation level. So whether you choose to add a supplemental tab on your calculator, or maybe you just have it tracked internally on your own work papers, it's something that we are going to need to review. And then the other option would be to contact CARB, and you can set up a temporary pathway to generate under the diesel CI level. So you're really only going to be forced to choose this option if, say you're a biodiesel plant and you only sell in California, then you're going to have to apply for this higher CI and generate a deficit on those shipments. All right, moving on to the specified source feedstock process. CARB has started drafting some guidance, but we're not sure exactly when that's going to come out. So just wanted to touch on a few scenarios that we've come across, and also wanted to stress that this is probably going to end up being one of the more time-consuming pieces of verification. So as much as we could get done on the front end with this as well, as far as like we're going to need to contact your suppliers for these specified source feedstocks. So if we could get, contact information, maybe even go as far as letting them know that we're going to be getting a hold of them to ask some questions, just so they're not, surprised and wondering what's going on. That would be a good idea. It could even, obviously a lot of this information is confidential too. So if we need to, we could have a non-disclosure agreement between us and your supplier. Depending on what they have for support, it could even trigger an additional site visit to this supplier. But in the end, we're not gonna like take all their confidential information and keep it on file. For the most part, we need to view this and document it and make sure they're having the proper processes and controls. So a few scenarios here. One would be suppliers that sell multiple types of feedstock. So for instance, maybe you have a supplier that supplies both UCO and tallow, and maybe you only buy UCO from them, but there's still a risk there where obviously UCO has a better CI than tallow. So there's a risk that you could be reporting UCO receipts or tallow receipts as UCO. So that's something that we need to look into. Typically we'll start with a phone interview. And this we have to trace these feedstocks all the way back to the point of origin. So start with a phone interview. A lot of times we can do just a screen share with them, which is actually pretty nice, whether that be their mass balance or their tracking databases. And then suppliers that provide UCO or brown grease only, there's still a significant amount of risk with this. We still have to go back to the point of origin. So not only do we go back to the supplier, but we have to trace from the supplier back to, say the restaurants that they're picking this up from. So that's also going to typically require probably a phone call and a screen share. Suppliers that are doing tallow only, that's a little lower risk. We might be able to confirm on their website that they're doing this. We might still want to give them a call. It just kind of depends how much information we can get to. And then the same thing with corn oil. This is actually a specified source as well. But this is typically, going to be coming from an ethanol plant. So if we can confirm that this ethanol plant is, one of the big things is they have to be a dry mill. So if we can confirm that in a roundabout way, that might save us some time as well. And then just wanted to touch on a couple different self-collected UCO scenarios. One would be that we've came across, say you're collecting on a route. So you've got, multiple stops and you're kind of making a loop and coming back. The question is, well, do I really have to report the mileage to each of those, different pickups? And the answer would be no. You can just record the total mileage in that loop and then the total volume collected. And that would be how you would collect or calculate the weighted average for that piece. And then UCO that's getting collected from, an aggregator. Obviously, this mileage still needs to be included in your calculation from your location to that aggregator. And then just know that original UCO route collection logs must be retained as support and data sources for verification. And I believe that's all I have. So I will let Carrie turn it over to Melita now.
All right, thank you, Zach, for those great insights into the biodiesel calculator and the process. Last but not least, I would like to introduce Melita Kiriakou, also with the Christianson compliance team. Melita has been with the firm for a year and came to Christianson with 15 years of international sustainability expertise and also experience with her own vertically integrated UCO to biodiesel company and waste handling. Melita will be explaining how feedstock suppliers can play a part in reducing your CI values. Excited to hear about the opportunities, Melita.
Oh, one moment. Let's see. Carrie, can you take it back and let me reshare? I'm sorry.
Yep, I certainly can.
I forgot to hit that drop down button. There we go. All right. So I'm going to be talking about the joint applications and intermediate facilities. And feedstock producers are intimately tied to their biodiesel producers. So we wanted to talk a little bit about this process and to clarify some of the questions that a lot of folks have been having. So first, we wanted to answer the questions are what is the site-specific and user-defined data? And what are intermediate facilities and joint applicants? What's the difference between the two? what are the advantages and disadvantages of them. So the GREET model, the default values are quite conservative for a lot of the feedstocks, especially the waste feedstocks. The model includes default values for a wide array of data sets, including energy content, process refining energy, transportation distances. These can actually be found in the supporting tabs and in the tables below the input section. Some user-defined values can come from the biodiesel producer and replace the default values. User-defined values can also come from the site-specific data can come from the feedstock suppliers. So for example, if you collect your own UCO, instead of using the default 50-mile collection distance from the point of origin to the facility, you actually would use your actual miles to calculate the transportation distances. And some examples of site-specific data that comes from the feedstock suppliers includes at the actual operational specifics of the feedstock processing plant. And some of the examples include, for example, the energy used to render or refine 1 pound of feedstock. And you can see that those are in those sections of the feedstock tabs. Some feedstock processing energy and emission factors are key to the user-defined values, and they can have major impacts on a biofuel facility's CI score. 2 main things that can be changed on the waste feedstock tabs are noted below. They're the 2.5 and 2.6. Some examples of this are the tallow default carbon intensity, which is 303.82, and UCO is lower at 90.44. But a user-defined value can actually get these points much lower, even into the single digits, and this can have a massive impact on your CI score. For tallow, it can have up to a 10-point reduction in your biodiesel CI score, and for UCO, you can have up to a 5-point reduction. It is a little harder to move the score for UCO. It does take some potentially creative efforts to do so, but we've seen folks working with CARB that have been able to get that down quite low. Site-specific data reporting means that multiple entities can contribute to the site-specific data in a single fuel pathway application. And there's 2 different ways you can do that. You can either designate a single entity as the pathway applicant, which is an intermediate facility, or you can designate multiple entities on a single pathway, and those are your joint applicants. So deciding on how you want to do that, whether you want to use intermediate facilities or go with joint applicants, you have to decide if the effort is worth the reward, because it's a lot more work to do the joint application, but it could potentially be a really, really big reward in your lower CI score. So now I'll talk a little bit about intermediate facilities. Intermediate facilities are the entities in the supply chain that contribute site-specific data to the fuel pathway CI score. They're tied to the fuel producer, and they're not independently validated. So the cost is typically on the biofuel producer to include the intermediate facilities. They don't register themselves in AFP. They must be registered by the biofuel producer. They produce components of a fuel or an intermediate chemical that might be processed further into a fuel. This also includes feedstock processing facilities. They can be listed as intermediate facilities, which you could consider as aggregators or collectors or collecting points. A site visit is required for each fuel pathway that they're a part of. So if they're listed, so if a feedstock supplier is listed as an independent facility with more than 1 biofuel producer or facility, they're going to get a visit for each facility. Now, if the biofuel producer is part of a group that is being validated by the same verification body, that typically is just going to be 1 site visit. But if an intermediate facility is connected to multiple biofuel producers and each biofuel producer is using a different verification body, that could then end up being multiple site visits, and that could potentially make your suppliers very cranky, which we don't want to do. So next are joint applicants. That's the other option that you have. So this is where you have 2 or more entities are in the same fuel pathway application. This allows each entity to maintain control of their validation and confidential data for the portion of the field pathway that they submit. It is optional, so you don't have to choose joint applicants except for 2 situations: when you're using carbon capture and sequestration or directly supplied low CI process electricity, but that's really for ethanol, so it's not typically applicable to biodiesel producers and renewable diesel. So joint applicants, while they're optional, they do have some benefits. So first off, the main point for that makes joint applicants such a unique entity is that they are independently validated and subject to all the same requirements for pathway applications. So that means everything that's in the regulations that apply to field pathway holders applies to the joint applicants as well. So, and that could actually be a lot of extra compliance requirements than feedstock suppliers are used to. Biofuel producers are used to the EPRFS, potentially the EU's ISCC program. So for feedstock suppliers, this could be a lot of new regulations. All the monitoring plan requirements applied, as Paul went through those. And one nice thing, though, for joint applicants, unlike intermediate facilities, is they only have 1 site visit annually as part of their initial validation. And then, of course, their subsequent verification. So a joint applicant that is tied to multiple biodiesel producers, they only have 1 site visit. And then the cost, of course, is typically on the joint applicant as well. And joint applicants are linked to the biodiesel producer, but they can be a joint applicant with multiple producers. But again, that does not increase their compliance requirements. They just have the 1 application, the 1 verification, the annual valid verification, and then the 1 annual site visit. So in the end, in the long term, it's less work than intermediate facilities who might be visited multiple times. Some of the guidance on applications for both intermediate facilities and joint applicants can be found on the CARB website. And the feedstock supplier, the application typically follows the biofuel producer. So for example, if a biodiesel producer is a tier 1, then the joint applicant will be a tier 1 as well. If the biodiesel producer is tier 2, the feedstock applicant will be tier 2 as well. We haven't always seen that matching up, but that's how the process is supposed to work. Just remember that this entire process for joint applicants is a work in progress, and CARB is still trying to figure this out. But it's definitely in the producer's best interest and the biofuel producer's best interest to make sure that the joint applicant is prepared and has all their ducks in a row, because it can lead to some pretty major time delays if the feedstock producer's joint application gets hung up. So some additional guidance for joint applicants is to remember that there are no CI calculator templates or instructions like there are for biodiesel and ethanol. So this really requires a GHG specialist who is familiar with the full California GREET 3.0 model to build a custom feedstock calculator that can determine the CI score of the entire facility, because that's what you're actually doing in the end, is determining the CI score of the material, the feedstock being produced at the feedstock processing facility. And so you're determining a CI score for that entire plant. And that does require a modified GREET model. Hopefully CARB will put out a template. I wouldn't hold your breath, but we've asked for that, so we might end up with one eventually. Some tips and tricks for intermediate facilities. Just remember, biofuel producers need to prep their suppliers, like Zach mentioned. It does require tracing back to the point of origin, which is confidential business information for most suppliers. So as Zach mentioned, we can do an NDA at Christianson to be able to view their list of points of origin. It does require a site visit, and it can be quite time consuming. So for feedstock joint applicants, so these are the feedstock producers that are applying themselves, my #1 recommendation is consult with CARB early and often. Feedstock suppliers, the joint applicants specialists that you use to create your model should consult with CARB to work out your issues and to model the CI score of your facility accurately prior to validation. So that's going to save a ton of time and frustration. And it can take a long time. So you want to be careful selling a product with a certain CI score, because These are still new for CARB, and they are finding unique situations that they have to work through because it might be something that they've never seen before. So we recommend that you always check with CARB, run by them what you're doing, and so CARB can really understand it and provide you with guidance or an operating condition, and operating conditions are what we validate to. It gives us guidance as the validation body as well. This is also going to help you you want to maximize your CI score, and that takes time and effort. So, you can't, if you haven't worked it out and you don't have the methodology, it's going to take a lot longer for CARB to accept unique things that you're doing that could have a big effect on your CI score, which also leads to monetary rewards as well for that lower CI score fuel. Another thing to note is that conservative measures can be taken so that the facility fits the models. Because again, you're making a feedstock CI calculator from the GREET model, and you're not using a template. So, we're trying to basically, fit a square peg into a round hole here. So this reduces your need to get time-consuming approval from CARB for unusual situations. Some examples of this include ineligible raw materials. So ineligible raw materials include off-spec or outdated food-grade oils, like expired olive oil, for example. So you could work with CARB to figure out a way to include them, and CARB would have to deliberate whether that's an eligible material and how to include it. Or an easier way is just to exclude it, and you would just exclude the finished goods as well using the yield of your plant. There's guidance in the LCFS document 1908, the fuel pathway allocation. It's the same guidance that you would use as a feedstock joint applicant. Another thing you can't do is you can't co-process multiple types of raw materials with different emission factors without separate energy meters or without CARB approval. And getting CARB approval for this could take a very long time. So the easiest solution is just to exclude one material. What we'll typically see is UCO and tallow being processed at the same facility. So you exclude UCO, otherwise, because UCO takes less energy to refine. So if you kept them together with the same energy usage or energy used to process them, basically the tallow energy, refining energy is underreported, and the refining energy for UCO would be overreported. So it's super simple, just take out the UCO. It's more conservative, and CARB is always fine with that. And the same would apply actually to a biodiesel producer as well. If you're processing feedstocks and selling them, you'd still want to work with CARB, but that's a way that you can do it as well. Some trends and tips for additional tips are around the monitoring plan. This is where we're seeing a lot of nonconformities because these are new requirements for feedstock companies. Calculator specifics, just some things to note because there's no template, there are no instructions. The inventories of raw materials and finished goods don't need to be reported for feedstock joint applicants. UCO is reported as is, so you don't have to moisture adjust. That'll be taken care of in the biodiesel producer's calculator. Tallow and meal co-products do need to be adjusted for moisture. That's so you can compare apples to apples. But you'll need to present your testing methodology and be able to back up your testing results. Only meal is allowed for tallow as a co-product, and no co-products are allowed for UCO, of course, unless CARB approval. All energy usage must also be reported. All energy must also be reported whether you're using, and if you're using something alternative, those user-defined emission factors for alternate fuel, or if you're going to use user-defined emission factors for electricity or natural gas, those are approved by CARB, and those can be done either post-validation or pre-validation. So it can go either way with that. All right, raw material transportation. So this is really similar to what Zach said. For tallow, the point of origin is the rendering facility, so we don't worry about mileage from the point of origin to the collecting point or rendering facility. UCO has the same weighted hours transportation requirements as self-rendering biofuel producers, so that's the mileage of bulk loads, like from fry lines, from the point of origin to the processing facility. This also includes UCO or brown grease from collecting points or aggregators, and UCO en route. You do the full gallons, full mileage, and that's what goes into your weighted average or a conservative estimate, but that also has to be confirmed to ensure that it is indeed conservative. And do remember to keep those UCO routes. If you don't have the original UCO route logs that show the stops and the gallons and the miles driven, we can manage that with a qualified positive statement, but they do need to be retained moving forward. So 10 years is the retention requirement for LCFS, which is definitely new for some folks. And so for specified source feedstocks, again, tallow, same as what we discussed. UCO, same tracing applies for feedstock joint applicants for biofuel producers. One thing we would request or recommend is to sort your raw materials by type and the pathway into your facility. So for example, self-collected UCO on routes, or brown grease from aggregators, or bulk UCO from fry lines via rail. You just want to make sure that you're designating all of that, so it's very clear what types of material are being processed. It's not all waste, and not all waste is considered equal. So we want to know exactly what's being processed at those feedstock facilities, and so we can test it. One thing to note that is allowed, or you can have sister facilities that are owned by the joint applicant. So any upstream collections, like from a transload facility or a hub, can be included, that those quantities can be included, as long as they're under the same ownership and it's a satellite of the main facility. You still have to report all the energy at that storage and handling facility, all the route miles, so any oil collected from points of origin to that hub, and then from that hub to the processing facility. All of that has to be accounted for to calculate the full life cycle emissions. So I know we've kind of blazed through this because we're running out of time. In conclusion, for your joint applicants, whether you're a biofuel producer working with a joint applicant, or whether you're a joint applicant ready to apply yourself, the #1 recommendation is reach out to CARB before you submit your application and discuss what's going on at your facility. And you want to be prepared to document and explain everything that you do in the way that you do it. There's no hiding from CARB and LCFS. So just be prepared to explain everything, and the more documentation that you have, the better and smoother your validation is going to be. And with that, we'll turn it back over to my colleague, Carrie.
Thanks, Melita, for the information on the feedstock providers and producers and how they can work as a team to lower the overall carbon intensities of these fuels. That is some wonderful information that you shared, and we appreciate that. At this time, we do have a little bit of time left to go ahead and take some questions. So I will start with one here for Paul. We do have a question in on whether there are any templates available for the monitoring plans.
There's not a set template. The rules just have guidelines, and I guess kind of deferring back to a little bit what I mentioned in the presentation, which is it's important to make it what you want it as an organization to be. You can make it more detailed and very extensive if you wish, but obviously there's a lot of elements there, so it's really making sure that it meets all the necessary elements to keep the verifiers informed of the process, but it's got to be something that flows with the way you want to manage it. We've seen some facilities that have literally done it all in almost entirely in spreadsheet format. Other ones have done it as a written document, with most of it being, say, a written Word document, which can get kind of long, or a combination of written documentation along with tables.
Awesome. And again, these consultants that are out there, which are our engineer consultants, are part of that group and are familiar and have seen a number of these, I'm sure have some templates of their own that they'd be happy to help you write your monitoring plan and organize that. So definitely feel free to contact them. That does not cause a conflict of interest in using Christianson for a verification or a validation engagement, because we can use a different one of our subcontractors to be a part of the verification team. So definitely feel free to reach out to our group of engineer consultants. Next, we have a question here for Zach. On the weighted average moisture and the transport distance that's reported on feedstocks, is that done on purchases or is that done on usage? So what happens if you have purchases and no usage or usage and no purchases? Can you explain that a little bit?
Whoops, almost
Not sure if
forgot to
you're
unmute.
answering, Zach, but you might be
Yeah.
on mute. We're not hearing you.
You hear me now?
Yep, we got you.
Okay. So yeah, we did a little looking at the calculator, and the calculator factors these two based off of purchases. So say you have a month, and this is probably a pretty rare occurrence, but say you have a month where you didn't have any feedstock purchases, but you did have some inventory usage, then you would not be required to report, obviously there's nothing to calculate for the transport or the moisture in that case. But vice versa, I guess, if you had a month with purchases and no usage, then you would be wanting to report those two fields.
Thanks, Zach, for that clarification. Next, we have one here related to intermediate and joint applicants, intermediate facilities and joint applicants. The question is, what happens if one of these suppliers that are connected to the biofuel producer are out of compliance with their CI? Who's responsible for that and what happens? Do you have any insights on that, Melita?
Well, each applicant, so for a joint applicant, each applicant is responsible for the portion of for their portion of the supply chain that contributes to the CI of the finished fuel. For intermediate facilities, the requirement falls to the biofuel producer. So it's really, the responsibility increases for the joint applicants, and for intermediate facilities, it's more on the biofuel producer.
So if the feedstock facility, just as additional clarification, is if the feedstock facility was over their certified CI number and they are registered as an intermediate facility, that does fall back to the biofuel producer for responsibility. And the same would be true of record keeping requirements and everything else. So as an intermediate facility, the biofuel producer is really taking full responsibility for all the reporting and record keeping requirements and then being in line with the CI.
Absolutely. And per the regs, the intermediate facility is supposed to comply, right? But there's really no jurisdiction over them. And so it really does fall back to the biofuel producer to make sure that it happens.
Perfect, thanks. Also in regards to the intermediate facilities and joint applicants, so sounds like there's a lot of work for the feedstock suppliers to get into this. So any ideas on how those relationships are working and what the feedstock supplier receives, or, I mean, why should they do the extra work is essentially the question.
Right. No, that's a great question, because for feedstock suppliers, this is a lot of work, right? For biofuel producers, you're already participating in the RFS. So to add LCFS, it's really not that big of a stretch. But for feedstock producers, this is really a lot of compliance requirements. And it comes down to business relationships and the monetary advantage that having a lower CI score can get the biofuel producer, and that means that could then go back to the feedstock supplier as well. So really low CI feedstocks have a premium. To get that low CI score, to prove that takes a lot of work, but that's the risk. But the reward could be that the feedstock supplier can charge more for the feedstock that has this really low CI score, and the biofuel producer can then also charge a premium for this really low CI score fuel. So it really is, the benefit is throughout the supply chain. And so even though the joint applicant, the feedstock producer is independently validated and is its own applicant, the reason why it would do this is because of the end product for the biofuel that comes from the biofuel producer and the premium that's able to command.
Awesome. Thank you, Melita. We have one more final question here. We got a minute left. This one is for Zach. You mentioned weighted average of co-products. And so when you refine glycerin, it could essentially be sold dry with very, very little moisture in it. So what happens with that where it's essentially dry? Are they expected to adjust for the weighted average moisture even though it's very small? Or since it's essentially dry, can they report it as is?
Yeah, so in some cases, CARB may say, you know, it's such a minimal amount, kind of similar to the slide where I was talking about methanol in different catalyst mixtures being reported or excluded. So in some cases, I think they could say, you know, not to worry about this correction, but it's something that if you're questioning, you should definitely bring it to CARB and make sure they're okay with it.
Awesome. Well, that brings us to our scheduled end time, slightly over maybe. So we'll go ahead and wrap everything up. Any remaining questions that were not answered will be addressed by email or private phone call. Thank you again to Paul Mordorsky, Zach Hauser, and Melita Kiriakou for joining us today, and to everyone for your attendance today at the LCFS Verifications Demystified webinar. We at Christianson would like to wish you all a safe and healthy rest of the year. Thank you.